In today's interview, we have Rick Rule. Rick Rule, of course, is a regular on our channel and a legendary natural resource investor. Today we're going to be talking about uranium. And truth be told, I originally got interested in it from you, Rick, and kind of hearing, of course, your fairy tale kind of stories of your worst performer in the last uranium bull run, doing about 20x, having at least one, I think, doing over 100x. And so I was interested in it once we saw all these cheap prices in February, March, and I started getting interested in commodities. And you and I spoke back then, and you were excited about it, but you were a lot more neutral, I would say, about it at the time. I'm not sure if we even had the mine closures yet or any of that. So what's your view on uranium right now? How has 2020 and the lockdown shifted your view?
Well, clearly the last 4 weeks have been spectacular. And that isn't a function of any precipitous increase in uranium demand, but rather is a consequence of a precipitous decrease in uranium supply. You mentioned the shutdowns. The shutdowns, actually, some of them go back as much as 3 years. Market shut down some of them. If you're producing uranium at $50 a pound and you're selling it for $15 or $16 a pound, it's a very boring business. And so that took care of itself. But when the shutdowns of efficient producers began to take place, in Kazakhstan, the cheapest production in the world, a lot of that got shut down. And when the Canadians shut down McArthur Lake and Cigar Lake, the two biggest, highest grade uranium mines in the world, the writing was truly on the wall. I'm not sure at this moment that we're off to the races, which is to say, I'm not sure that the supply deficits juxtaposed against uranium demand worldwide are about to spike uranium prices higher. But I think that you can see that circumstance from here, and speculators are beginning to react to that. It's important for your listeners, Jake, who aren't familiar with the uranium story, to hear both parts of it. The first is that whether the policy elites around the world care or not, uranium is an important part of baseload electricity demand worldwide. And people will continue to use it because it's cheap on a cash basis and because it doesn't generate carbon. So demand for uranium will continue. It may not grow as fast as it grew in the past, but it will continue. Right now, on a global basis, all in terms of cost of capital, exploration, taxes, all that, it takes between $50 and $60 a pound to produce uranium worldwide. There are people who have cash costs of production, which is to say direct site costs, down as low as $15 a pound. But it's important to note that global total costs exceed $50 a pound. So you make the stuff for $50 a pound, you sell it for $27 a pound. You lose $20-something a pound, and of course try and make it up on volume. That can't be continued. That's the arithmetic. The second thing for your speculators who are new to the space to understand about the space is it's very small, and pardon the phrase, explosive. In the past uranium bull market, at the beginning of the bull market, there were 5 uranium juniors that had survived a 20-year-long bull market. That number now is probably up to 25. But it's important to note, as you quoted, that in the last bull market, the poorest performing of the 5 uranium juniors returned 22 to 1. The best performing uranium junior went from 10 cents to $10, albeit it went from 10 cents to 1 cent before it went from 1 cent to $10. So the upside potential in these things is spectacular. A lesser known fact, Jake, also bullish, that your listeners should pay attention to is that of the 25 juniors in the space, probably 8 or 9 of them are reasonable speculative propositions, which is to say that the population of good companies rather than relative to total companies is the highest in the uranium space of any commodity group that I follow. If there are 1,500 gold and silver juniors in the world, there are probably only 200 of them worth considering as speculations. which is to say that the percentage of viable companies relative to the total population is very low in gold and very high in uranium.
Yeah, interesting. Yeah, it's been fascinating to learn more, and I've had a lot of, or I'm starting to have a lot of people, researchers and people that are doing a lot of the nuts and bolts that I'm sure people like that you're conversing to on a regular basis. But I didn't feel like you swing a home run there. You still think there's a ways to go before spot moves, because that's the $1 million question, right? And then the Camco shutdown recently, again, was in the last couple of days. So you're still in the camp, or you still think that the supply deficit isn't there enough to move the spot price?
I think that the spot price will move within 12 months. When you and I visited, I said what would certainly move the spot price is a restart of the Japanese reactor fleet, because that's where the surplus came from. The truth is that our total demand for uranium worldwide now exceeds the pre-Fukushima demand, with only 9 of 43 Japanese reactors restarted. And I think the writing is on the wall now for higher spot prices. But it wouldn't surprise me if it took 12 months for that to occur. It wouldn't surprise me if it began to happen in 3 or 4 months either, because the Cameco shutdowns are really dramatic. If you combine the Cameco shutdowns with the Kazatomprom shutdowns, most of the economic uranium in the world is now shut in. And importantly, while the Kazakhs can restart production very easily, restarting the Canadian production, even if they're spending $10 million a month on maintenance, which they are, can take a long time. So the uranium price can move on, and it's not like the Canadians can flip a switch and start producing uranium again. There are lead times that will be involved in this. Importantly, too, and this is a more subtle point, there are a lot of old, fat, rich guys like me who participated in the last bull market. And we have itchy trigger fingers. If this market gives us very much encouragement at all, I think that the flow of speculative capital in this space that remembers the last bull market will be very strong. Now, listen, Jake, it's important that you communicate to your readers that this ride is going to be like a rodeo ride on a bull. This is going to be up and down with all kinds of volatility. In the last 3 weeks, we've seen insane upside volatility, with some stocks as much as doubling in 3 weeks. It wouldn't take anything for those stocks to give back 50% without the rally having started yet. So investors and speculators in the space, particularly young investors, have to right-size their investment. It is, I'm not going to guarantee this, but it is not unlikely that a 1% portfolio position in uranium becomes 10% of one's portfolio over 5 years, and not because the rest of your portfolio fell apart. If there is one sector, or let me put it differently, the sector that I see that has the highest potential in high risk accounts to generate 10 baggers over the next 5 years is the uranium space. People who enjoy those 10 baggers are going to deserve them, because they're going to experience mind-numbing volatility in the interim. And they're all also going to hear from the big thinkers, the Joe Bidens of the world and the Greta Thunbergs of the world, that uranium is a very bad thing. They're going to hear that. Uranium is not a bad thing. Uranium is the thing that when you flip the switch on the wall makes the lights go on, which is a good thing. But the big thinkers don't like that. They don't care about the lights. They don't even care about the carbon. So great sector for those who are financially and psychologically prepared. Do not overinvest in uranium. Do not invest more than you can afford to lose. Use that portion of your portfolio that you have a 2 or 3 year time frame with, that you can afford to lose half of, where you are legitimately searching for 10 baggers and understand the risks that are inherent in the search for those rewards.
Yeah, that's what I've been focused on. But let me ask you, what percentage allocation do you have now versus what you had back in February when maybe we talked about this?
Well, they've increased as a percentage of my portfolio because the stocks have done well. I haven't made new acquisitions since February.
You have not.
I have not. I last week trimmed a couple positions that I thought had run too far too fast. In fact, I will be increasing uranium's place in my portfolio over the next 12 months. I was waiting for the pace of Japanese restarts to increase before I increased my portfolio. I was willing to let the market have the first 20 or 25% rise for free. The market has had that 25% rise for no reason at all, except for anticipating the price results of production cutbacks, which I think is a real set of circumstance. So I will be increasing my exposure into uranium over the next 12 months. I'd say I'll probably triple it on a cash basis from here.
What's it at right now versus where you anticipate it may be at?
No comment. That's too close to the bone.
All right. Well, I've got to ask you that. You know that. Because I do these interviews obviously for other people, but I basically get free coaching, and I recognize the potential of this market. I started buying in like February, March, but I realized that there was still a lot of questions on the supply and demand. And to me now, looking at the shutdowns and looking at these numbers of the 180 to 200 million producing or total needed, and how much Camco will shut down between both of them, and buying off the spot market. It seems I understand the volatility of the prices along the way, but the long-term trade of this, I can't see. Maybe 10 years from now, who knows, they may eventually replace it and all those things. But right now it feels like there's a very asymmetrical risk to reward. Or do you think that my head's too far in the clouds as a speculative investor looking to get rich right now?
I think you stated it fairly well. I think that there's an asymmetric balance between risk and reward on the size of reward. There are people who aren't psychologically prepared to take volatility or 3 or 4 down months. Those people should not be in the uranium space because they will face larger psychological tests than they can pass. It's important, too, that people who construct uranium portfolios think about balancing them. Everybody is attracted to the 10 baggers or the 20 baggers, but it's important in constructing a uranium portfolio, if it's a thematic portfolio, if you're constructing the portfolio because you think the price will go from, $27 to $50 or $60, it's important that you include some of the bigger companies in your portfolio. It's important to capture the market moves, not just the speculative moves on the gamia stock. So it's important that you at least study Cameco, Kazatomprom, and China General Nuclear, the 3 biggest. Those aren't stock recommendations, but it's important that people who are going to invest in the space familiarize themselves with those companies and study them in preparation for buying. The second tier in this case are statistically unusually attractive. As I said, there are probably 25 uranium juniors. There may be 30. There are 9 and 10, which is to say more than 30% of the population that are, from my point of view, worthy of consideration. And that's the highest proportion in any commodity that I follow. Unusually, the last uranium bull market saw an exploration boom that resulted in some legitimate tier 1 discoveries. In other words, there are some discoveries out there that will be tier 1 important world scale deposits. So putting them in a portfolio might be a good step 2 after one put in place the biggest and the best. And then there are an unusually number of high quality teams with projects where they have discoveries that aren't tier 1 yet, but could become tier 1. So this is an unusually fertile place to build a speculative portfolio for those that have the financial and psychological fortitude to do that.
Okay, so now we got to get excited. Where do you think that this can go, Rick? So looking at the supply and demand fundamentals, looking at the fact that it at least needs to get around that $50 mark to bring a lot more of these mines online, having this new round of shutdowns that just happened. How does this rival, do you think, versus the last time, especially considering when I asked you this question before, you were like, yeah, but how has it changed seeing what's happened this year? Where does it rival?
It's impossible for me to believe that this bull market will rival the last bull market, simply because the last bull market had followed a 20-year bear market. This one's only followed a 10-year bear market. So we haven't had as much of a washout. It's also impossible for it to rival the last one in dimension because the dimension of the last one was so silly. The price of uranium went from $8 to $150 a pound. There was no Kazakhstan to put a lid on prices. There is now Kazakhstan and Uzbekistan, who, if they begin to invest now and invest for 5 years, can put a lid on prices. But they're highly unlikely to do so until you see US 50 or US $60 a pound. The younger generation at Kazatomprom, your generation, not the old fat commies of my generation, but your generation understands that in Kazakhstan, the reserves in the ground are worth more than the cash that they would generate by producing them at low prices. So they're going to wait for an incentive price. If you take the price of uranium from $27 a pound to $60 a pound, the impact on the free cash flows of the big three uranium producers is astonishing, truly astonishing. I mean, if you think about the fact that your cash cost of production right now for a very efficient mine might be $20 a pound before depreciation, all that kind of stuff. You're selling it for $27 a pound, okay? You're making $7 a pound, which is okay. If the price goes to $35, which is to say the price of uranium goes up 20% from here, your operating margins double. If the price of uranium were to go up 30% from here, your free cash flow triples. You get the leverage inherent in these things. Even more importantly, in tier one deposits that aren't economic at $27 a pound. In other words, where the free cash flows over 10 years don't justify the upfront expense for construction. At $50 or $60 a pound, these deposits have net present values of $3 and $4 billion, where they have no net present value whatsoever now. So you take the market cap of a company with a tier one deposit that might be $200 million. It's at $200 million because the net present value of the deposit at $27 a pound is zero. But the net present value of that same deposit at $60 a pound can be $3 billion or $4 billion. Very exciting set of circumstances. The price of uranium doesn't have to go to 150. It has to go to 60 or so. And at $60, you would see, I believe, an extraordinary run in the sector. And I'm not guaranteeing it will happen, but I think it's much, much, much more likely than not to happen.
Rick, I'm guaranteeing it right now on the show. I'm guaranteeing it. I feel like, it's just, this seems like a no-brainer. And I took into heart what you said last time we talked, which was, having a better allocation instead of basically being 100% of my net worth in silver. And I feel pretty excited, and I'm looking at these things and I'm looking at this math, and it seems great. But if I was a multi-billionaire, or if I was at least had some extra levers in my dashboard like Rick Rule, I'd be wondering, based off of what I heard in the last market being that institutions and big money and funds kind of front ran the spot market, with how much of a deficit there appears to be entering, how much credence do you give to some black swan factors such as big money front running the market, et cetera?
I think a bigger black swan, a negative black swan, would be another power plant catastrophe. If you had a replay of Chernobyl or Three Mile Island or Fukushima. That would be very, very, very negative. And people need to bear in mind that they need to use money that they can afford to lose. It seems like we have a nuclear accident every sort of 10 or 15 years. They're much less frequent than oil and gas accidents, as an example. They're probably less frequent. Well, obviously, they're less frequent than house fires from solar panels. But the fact is that there is a chance that we could see a nuclear power plant disaster. If we saw a nuclear power plant disaster in the very near term, uranium portfolios would probably be down 30 to 50%. People who can't tolerate that volatility shouldn't be in the space. But as you stated, what attracts me to the space is the asymmetric nature of the relationship between risk and reward, and the simple exponential upside that I regard as being more probable than possible.
More probable than possible. That's interesting. So you answered one of my, I was putting a list together of questions, and you answered one of them with that. You turned my positive, I was putting you up on a tee to get some people like Tony Robbins jump up and down, fired up, and you come back with the worst case scenario.
We've given people so many excuses in this interview to get excited. I mean, let's review them. I think that there are at least 8 stocks in the uranium juniors that over 5 years will go up tenfold. That means that a third of the population base in the sector could go up tenfold. Ironically, if the sector goes crazy, the worst companies will generate the best percentage responses from the lower base. But I'm leaving them out. I'm leaving out the penny dreadfuls, the nothing nowhere companies that are all narrative. What I'm saying is that the juniors that have the lowest downside as a group probably collectively have tenfold upside over 5 years. That's goofy. I'm saying that in my own mind, I'm capping the upside in production at $60 a pound, because ultimately the Kazakhs can produce enough uranium to supply what the world needs. But in the near term, if the price runs, the Kazakhs won't be able to turn on that uranium that quickly. So it would be easy to see the price shoot temporarily above 60, as high as 75 or 80. Your listeners should not make their investment calculations based on 80, because it'll be a self-correcting phenomenon. But the last run we saw, I suggested that the market clearing price for uranium would be $50 or $55. In other words, that would be the incentive price to bring in new production. And the price went all the way to $150. It overshot in the short term. And the consequence of that is that the equities really, truly overshot.
Okay, so in conclusion here, then let me ask you, when you talk about the $60 assets in the ground and basically them being able to have price control, I mean, so you're essentially saying that they're not economical here, but at 60 they're very economical. Therefore, they have enough supply to corner the market basically and cap the price, so utilities go to them. Am I understanding that correctly? Or no? Because I guess I wonder from the perspective of like people scream silver and gold manipulation. You're essentially saying that this market can be kind of cornered at that price range. Is that what you're saying?
No, you correlated the answer to 2 different questions. Nobody has the ability on the sell side to dominate this market. The closest that we come are the Kazakhs, who are the world's lowest cost producer and can easily be the world's largest producer. But the truth is that demand is diffuse among many, many generators in many, many countries, and many places think that uranium is a critical material. The Japanese even regard it as a strategic material internally. At the same time that there are multiple sources of supply. What I was saying is that prices above $60 a pound, there is enough discovered tier one deposits that will be put in production, that the price doesn't need to be materially above $60 a pound in order for the world to be adequately supplied with uranium. Make no mistake, at $25 a pound, if that number continues for 5 years, the lights go out. You cannot make stuff for $50 and sell it for 25 and keep producing it. And the truth is that uranium, despite the fact that it's out of favor, produces baseload power, important baseload power for many countries in the world, in particular the United States, where it produces about 15% of total power and about 20% of baseload power, which is to say, in the United States, if the uranium price doesn't go up in the next 5 years, the lights will go out. And I don't think that's likely. I think the price goes up.
Yeah, you said something interesting too that I've been thinking about as a strategic asset. It seems like there's so many components. I think that this is going to be mind blowing, and I think that I'll be jumping up and down. I'll probably buy you like a $75,000 bottle of wine with some of my proceeds. That's what I think is going to happen. But you said something about strategicness with countries and that types of buying. What weight then do you hold to there being basically a switch moment in the price where people kind of wake up and the governments wake up or militaries wake up or hedge funds wake up and they say, oh gosh, we're really short on supply and we have a big crunch in the price upwards in 2021? Or do I sound like a fairy wisher?
My gut feeling is it occurs in 2021. I've been saying in interviews for years it wouldn't occur until the Japanese restart occurred. But I think we've run through so much inventory, so much surplus Japanese inventory, that the reset in prices occurs in 2021 anyway. There is less impetus for it now, and we need to understand that. The world's economy is sort of lumbering as a consequence of debt and COVID. And other forms of energy are very cheap. Liquefied natural gas in particular is very cheap. So the need for places like the Japanese to turn back on their nuclear plants to obviate more expensive fuels is less than it otherwise would have been. We covered all this ground in your prior interview, but many people listening to this interview won't have listened to that interview. So it's important that they know that. I believe, however, that the recent shutdowns by both Cameco and Kazatomprom, combined with the very, very, very long period that we've gone without adding supply, means that the reset in prices for uranium probably occurs in 2021. And I think that's the reason that we saw the upward shock in uranium equity prices around the Cigar Lake shutdown.
All right, you heard it here. Rick Rule, getting excited. All right, so good stuff. Let me ask you then in conclusion, and I think this is a great way to get a nice little update. So for someone like me that is tends to a little bit be on the more emotional side, sometimes I get a little bit too excited. And so I got a nice healthy position that I think can do some wonders. And so I'm looking at all these stats and data you've been discussing, and it has me very excited, very optimistic for some big stuff in 2021. And so in conclusion, I'm screwing my head on straight and be prepared for any volatility, being prepared that I could lose 50% of the money, looking strongly at those tier one producers, understanding that there's a lot of 10 baggers out there, maybe 30% of the component. Is there anything else that I'm missing for someone that has really put the gas burners on to my portfolio from zero to from zero in 2019 to a good percentage here in 2020?
No, I think you're in the right place for you, Jake. You're a young, smart, hardworking guy who spends every waking moment either on his business or on his investments. And you are, without going into gory details for your subscribers, rich, so you can afford financial risk. You are also oriented towards risk. I would suggest that the advice for you is not necessarily the same as the advice for all of your subscribers, some of whom are young, not having the same financial resources that you do, nor having the same psychological profile that you have. My suspicion is that for you, your allocation is excellent. And my belief, although it isn't a certainty, is that you aren't going to have a good outcome. You're going to have an extraordinary outcome. But part of that is who you are. The listeners that you have that have maybe, $20,000 worth of savings to their name, that are making $80,000 a year and maybe able to save $5,000 or $6,000 of it. Those are people who need to constrain all of the speculative aspects of their portfolio because they don't have as much to lose and they have less psychological capacity to lose. For you, I feel absolutely no compunction in saying I'm glad that you are in place. If you see the uranium equities stumble by 30 or 35%, add to your position. Pay attention to stock selection because it's extremely, extremely, extremely important, and be willing to let your winnings run when it starts. Last bull market in uranium, I was pretty cautious because I've learned that bull markets always end in bear markets. If I have any criticism of my participation in the last market, it's that I was too rational and I sold too soon. I missed probably 40% of the upside in the blow-off. Now, the truth is, missing 40% didn't matter relative to how much I made. But I occasionally regret being so quick with the trigger finger anyway, given how much I left on the table.
Good stuff. That's exciting. Yeah, I'm super excited. I'm really grateful for, you telling your story for so long about everything that you've done. It's not just me. I know there's a lot of people that are really excited and, they owe a lot to you sharing your story because it gives us somewhere where we can screw our head onto through the volatility and the emotions. And I've also learned a lot about personal development and personal growth from you, especially investing in natural resource stocks where they're so volatile. You've preached these types of things, but 2021 has been a serious guidebook between everything going on to really practice this. So I appreciate everything you're doing. And I want every viewer to know Rick amazing offer. He will review your natural resource portfolio for free. It's sprottusa.com/rankings. I'll hand it over to Rick. It'll be in the description, but I'll hand it over to Rick to discuss some of that. And thank you again.
Really, three things I want to say. The first is I look forward to ranking people's portfolios. I like educating people, old and young. And there's no education that seems to be as relevant as education around one's own fortune. So,
yes, this is true.
All you have to do is go to their website, sprottusa.com/rankings, enter your natural resource stocks. Please, no non-natural resource stocks. And please enter the names. And I'll rank them all personally, 1 to 10, 1 being best, 10 being worst. And comment where I think my comments are worthwhile, particularly your uranium stocks. I'm extremely familiar with the sector, given how nice it's been to me in the past. A couple other things. If you mention charts, in that request, I will send you the Barron's Gold Mining Index chart, not as a technical tool, but rather as a visualization tool to understand precious metals bull markets in their historical context. I'll also send you a 100-year commodities chart, which will show you how cheap commodities are relative to other sectors of the economy going back 100 years. And for those of you who are interested, if you add uranium management, we are considering within Sprott setting up segregated managed accounts where we manage uranium portfolios for investors. One of the things that we've seen, we've looked at 2,200 portfolios over the last 12 months that have uranium stocks in them. And we've noticed that because it's been so long since the sector was in favor, many people who own uranium stocks are unusually attracted to narrative rather than value, which is to say, although the sector is attractive, the portfolios that we have reviewed have been unusually skewed to poor rather than good companies. So for those who are interested, if you add uranium management within the question field, to the extent that we ultimately do develop a uranium managed account, which we're actively considering right now, we will forward information about that. Absolutely no conditions with regard to the rankings offer, but if you're interested in the rest of the offer, let us know.
All right, so everyone, you can check that out at the link right there down below. Now, Rick, you've been a lucky man. You've had this humongous uranium bull market that did fabulously well. And as you're coming into your retirement age, I'm telling you that this one's going to be just as big or bigger. So you're going to get both of them. So if you're excited as well, hit the like button on either side right over there. Comment down below, Rick Rule rules. We always appreciate Rick coming on. So send some love and support over to Rick for sharing his time with us by filling out your portfolio down below and leaving a comment that Rick Rule rules.